We'll bring in Rosenblatt securities analyst Barton Crockett to have a conversation. Barton, I look at your coverage list, and obviously you cover a lot of media names, but you also cover many of the Mag 7 names, whether it's Meta or Apple or Amazon. I'm curious, as early part of the year here, what have you been getting the most questions about? What name and or theme, perhaps, is most often brought up to you by clients?
Well, I think what we're hearing is a real kind of digestion of what can happen this year after a terrific performance last year. How reasonable is it to continue to ride many of these horses which have just run so well? I think our stance coming into this is that this is a year that you need to be careful about what you pick. But I do think that in the large cap consumer internet, where our tech coverage is focused, where our Mag 7 exposure is focused, there are some opportunities for companies that have an ability to really explode margin. And what we've seen is a precedent with Meta, explosive margin expansion. And I think what we're seeing are some companies following on that'll be able to put up some great margin expansion in 2024, coupled with really terrific revenue growth. So I think you see that at Amazon. I think you see that outside of the Mag 7 at companies including Pinterest and Spotify. Where I think you have a little bit of concern are some of the ad stories where the comparisons get more difficult in the back half of the year. Meta's been a great performer. We continue to recommend it. But that's where I'd have a little bit of question about, how strong can they continue to be in 2024 with the tough comparisons that they'll be coming against.
Yeah. All right. So let's go to Pinterest and Spotify, Amazon. What gives you faith there? The fact that they seem to really be focused on costs. I know a couple of those names I just mentioned have had some headcount reduction as well, I think.
Yeah. Look, I do think that what we had was a complete change in mentality coming out of the pandemic. So in the pandemic, ahead of the pandemic into it, these companies were spending, and they were spending on a blue sky kind of view of growth that turned out to be, ahead of their skis. And so what we've seen is, a real mind shift that I think some people got to it earlier, some people are getting to it later. But these guys are growing up. They're behaving like real businesses that are really focused on maximizing the return on every dollar that they invest. And I think that has still to fully manifest at Amazon, at Spotify, at Pinterest. But when it does, I think it's going to be hard for the market to ignore the cash flow growth we're going to see there.
And finally, I noticed you don't mention Alphabet. Has that company not yet grown up, so to speak?
Well, that company is a grown up and then some. I do think that, for Alphabet, you've got a lot of cross currents. I continue to like it. They've got a great tailwind from artificial intelligence. I think potentially in cloud, if they can improve, the feature set gap they have to Microsoft right now. I think they have a great opportunity in YouTube where the usage has been growing, gaining share of consumer kind of view time. The ad revenues there have been surprisingly kind of lagging the kind of audience growth, and I'd love to see that turn around. And then when you think about the core kind of search platform there, I worry a little bit about the tougher comparisons to come and their ability to maintain the growth and the share loss to other, kind of things like e-commerce search on Amazon. So cross currents, but on balance, I think a decent kind of price for many kind of growth opportunities at Alphabet.
All right, Barton, going to leave it there for now. Appreciate it. Thank you.
Great. Thank you.